I'm gonna go all in here in the crypto market, ladies and gentlemen. I'm gonna go back on my ramen diet for those of you guys who know what that means. The next couple of months is going to be interesting because we're gonna start to see a massive repricing of everything that everyone sold last year. They're gonna FOMO right back in, and we're gonna start to see a new bull market. So I know it's a little tough to see. I know it's a little tough to think about this because many people are saying to themselves, well, how do you know that we're not going to crash? How do you know that this market's going to go down in the pits? Because we need a recession. We need a recession, yield inversions, macroeconomic fears, the war in Ukraine, inflation, Fed raising interest rates. Fact of the matter is none of that matters because the price action is telling you something different. So here we go. I'm going to show you the asset class return since 2011. The asset class that you should be in is Bitcoin, not any other asset class if you want major wealth creation. Anybody who tells you otherwise is underperforming Bitcoin by a massive margin. Now, in 2011, Bitcoin went up 1,473%, right? We go down every single year since 2022, with the exception of 3 years, obviously last year, down 65%. In 2018, which was our classic bear market, in 2014, had you bought the dip on those, had you bought in that year, I'm talking about buying the dip in that year, you would have made massive amounts of money 19, 20, 21. Year to date, Bitcoin's already up 82%. Anybody who tells you that this is a risky asset does not know what the hell they're talking about, because annualized return on Bitcoin is 151%. Now think about that for a moment. That means that every year that you're in Bitcoin, you're making almost more than double your money. And on the cumulative amount, you're making, now let me count this up because I can't count my zeros in this one. It's going to be almost 110. Wow, this is a pretty interesting number here. 10 million%. Okay, so let's repeat that one more time. You got 195, you got 195,044, and then you got the 10 zeros. So 10 million%. Okay. That's cumulative return from Bitcoin from starting from 2011. Had you bought, one Bitcoin, you would have made more money than everything else. Now, the second one's obviously the NASDAQ. NASDAQ is your second option, which is pretty much you're looking at 39% year to date. Cumulative, you're looking at 662% return. Annualized, you're looking at 17. Look at the difference between Bitcoin and the NASDAQ. How much of a spread you have in annualized returns. Now, this is not projecting future returns, but this is what you would have gotten had you bought the NASDAQ. It's 17 and the S&P 500 is only 12. Everything else is in the single digits. We're talking about stocks, bonds, small caps, gold, 3%, 2%. You can't even beat inflation with these numbers, right? So when I tell you guys that this is something that you should be paying very close attention to, what I'm really telling you is literally there's no other comparison. There's no other asset class that can even comes close. Even your high octane NASDAQ that made cumulative 662%, doubling up what the S&P 500 did, it's not even close to what Bitcoin did. Now, again, Bitcoin has high volatility, so you could lose about 90% of your money 1 year. And if you're not interested in that, then you can go somewhere a little bit safe, like buying some bonds and stuff like that. But if you take a look at the asset class overall, right, it tracks fairly close with other asset class. The only difference is Bitcoin is a high beta, high octane wealth creation, while the other ones are wealth preservation assets. Okay, so when people tell me, "Oh my God, you're in crypto, you're very risky," being risky is actually being in some of these lower return assets, because you're putting your money and you're locking them in, and you are actually not putting it in the best use in a more productive manner, right? Because if you think about it, if you put it into bonds or other stuff like this, your annualized return is extremely low, right? And so that money could have been put into something. I'm not saying put all in, you do all in like I am, but what I am saying is that it's really, really almost like night and day. Now, what's interesting also is that you live by the sword, you die by the sword. So if you're going to be making, if you're expecting to make some massive gains, be expected to get massive losses. And that includes in 18 and losing about 70 to 80% of your money in 1 year. Okay. Now, again, that's where trading comes in, and you got to be careful with playing with margin and all these other stuff. But even then, right, if you're trying to cap your losses, the returns far outweigh that. Now, in 2014 was kind of a weird one because we had a 58%, but look at the return in 2013. That was 5,507%. So yeah, you make 5,000%, you're expected to lose, a good chunk of that. In 2018, we lost 73, we gained it all back. Year to date, we've, we recovered quite a bit. We're not all-time highs, but again, we're recovering, and I suspect that's going to take another 2-3 years to recover all the losses that we had in 2022. And that's usually the trend. We get one down year and then we get like 3 up years. So 24 and 25 are going to be critical, because if history is any indication, not to say it's going to be exactly the same, we're probably going to get 22 more years of up years in addition to 2023. So I'm going all in. Let's see how it works. See you guys next time. CB out.